Welcome to the Coin Bureau Weekly News Roundup. My name is Guy, and here are the top stories in crypto this week. Big Bitcoin bounce. BTC pumps by 20% after shorts get squeezed, while ETF investors buy what could be the final dip before the blow-off top. How high could BTC go? Ethereum FUD intensifies. Analysts obsess over Sol's rising strength against ETH as the spot Ethereum ETFs start picking up momentum. When could ETH finally catch up? CFTC prediction scrutiny. The crypto industry pushes back against a new rule that could ban crypto prediction platforms like Polymarket. Why are politicians pushing for this? Carry trade complete. JP Morgan claims that the trillion-dollar yen debts which crashed global markets last week have been mostly unwound. What does it mean for the crypto market? And a closer look at last week's top-performing altcoins and where they could be headed next. All this and more in just a moment. Last week, BTC was a little on the volatile side, flash crashing below 50k before exploding back to over 60k. As always, this seems to have been caused by leverage. First, over $1 billion of longs were liquidated. Then, the shorts piled in, expecting lower lows. When BTC pumped, it squeezed higher. So, was the crash below 50k the local bottom for BTC? The answer seems to be yes, and that's simply because of the associated FUD. There were countless crypto personalities coming out either defending their bullish calls with long essays or capitulating to the bearish sentiment. Meanwhile, the spot Bitcoin ETFs experienced some of their largest daily inflows in weeks, suggesting that Wall Street investors were stepping in to buy the dip. At the same time, Bitcoin whales withdrew the largest amount of BTC from exchanges in over 9 years, suggesting that they are still accumulating. As a cherry on top, the supply of Circle's USDC and Tether's USDT increased by 1.5 billion and 1 billion respectively. This suggests that more money is flowing into the crypto market, particularly because USDC is being increasingly used for trading because of regulations in the EU and elsewhere that restrict USDT. Lo and behold, BTC rallied to almost 63k just 3 days after it fell below 50k. Now, from a technical perspective, BTC needs to stay steady around 60k to keep moving higher. At the time of shooting, it slipped to 58k and could go as low as 56k, which would suck. The best case scenario would be for BTC to stay put while altcoins rally, something we haven't seen in a long time. Interestingly, data from CryptoQuant suggests that BTC whales were preparing for an altcoin season late last month, which suggests that alt season could come sooner than we think. This makes sense when you realize that crypto is becoming politicized. And if you're subscribed to our weekly newsletter, you'll know there could be political announcements that pump the crypto market later this week. So be sure to subscribe using the link in the description so you don't miss our next market forecast. And while you're at it, check out the Coin Bureau deals page. It's got trading fee discounts of up to 70% and sign-up bonuses of up to $100,000 on the best crypto exchanges. These deals are only available to Coin Bureau viewers and they won't be around forever. So check out the link in the description ASAP. Now, when it comes to altcoin season, so far it seems it's just been Solana and meme coin season with a little bit of AI and DeepIn sprinkled in between. Not surprisingly, this has caused the Sol BTC chart to go parabolic over the last year, and it looks like it could be on the brink of a major breakout. Whereas the ETH BTC chart measures ETH's strength relative to BTC, the Sol ETH chart measures Sol's strength relative to ETH. Like the ETH BTC chart, the Sol ETH chart tells us nothing about Sol or ETH's price potential, just that Sol could perform better during a pump or hold up better during a dump. Even so, there's no denying that the Sol ETH chart is looking extremely bullish for Sol. It seems to be painting a cup and handle pattern which could cause Sol to rally against ETH by as much as 80%. Again, this doesn't mean that Sol will rally by 80%, but that Sol could outperform ETH if the market pumps. What's interesting is that this is almost exactly what happened with the ETH BTC chart during the last cycle. It also painted an enormous cup and handle pattern, suggesting ETH would drastically outperform BTC. However, this pattern never played out. ETH BTC just kept chopping sideways. Now, if we assume that Sol is following ETH one cycle behind, which is possible, then we could see history repeat. Specifically, this could be the peak of Sol's outperformance against ETH for this cycle. The negative sentiment around ETH suggests this could be the case, as does the increased suspicion of Sol. Logically, this would require ETH to outperform relative to Sol, Sol to underperform relative to ETH, or some combination of both. Regarding the former, it's easy to see how ETH could start outperforming Sol now that it has a spot Ethereum ETF, one which is slowly but surely starting to experience net inflows. As we mentioned in our recent Ethereum update, the fact that Ethereum is becoming ground zero for tokenized real-world assets could mean that there will be enormous spot ETF inflows at some point. All that's required is a catalyst, like another asset manager deploying another tokenized fund on Ethereum, for example. Regarding the latter scenario, meanwhile, it's easy to see how Sol could start underperforming ETH because of the Solana killers. If you watched our recent interview with Arthur Hayes, you'll know he revealed that Aptos will be making some big announcements in September, and you'll notice that SUI has already started rallying. In other words, these Solana killers could eat away at Solana's dominance during this cycle in the same way that the Ethereum killers ate away at Ethereum's dominance during the last cycle. This is something everyone seems to be forgetting, and it presents an opportunity for those paying attention. If you have been paying attention, then let us know by smashing that like button, and make sure to subscribe to the channel and ping that notification bell so you don't miss this kind of crypto alpha. On that note, it seems that the crypto market itself has been providing alpha of its own. Alpha which the powers that be don't want the average person to know about. I'm referring to crypto prediction markets, where people put their money down to express their views about a certain real-world event. Polymarket is the most popular crypto prediction platform, and it recently surpassed $1 billion in volume. Obviously, this is due to all the betting related to the upcoming US election. Now, what's fascinating is that Polymarket is even becoming popular outside of the crypto industry due to all that betting volume. That's because the fact that people are using real money, in the form of USDC, to bet on certain candidates or outcomes means that the opinions you see on Polymarket are arguably more accurate than anything you'd get from a political poll, which are often biased to favour one or the other candidate. The caveat is that bettors with deep pockets have the capacity to manipulate the markets on Polymarket. This means they can, say, make one presidential candidate appear more popular than they truly are. And this is presumably why US politicians have been pressuring the CFTC to crack down on prediction markets. Case in point, the letter to the CFTC argued that prediction markets like Polymarket, quote, could influence and interfere with elections and further erode public trust in democracy. Again, this is a legitimate concern, which is why it's strange that the crypto industry opposes the CFTC's rule. To clarify, the CFTC seems to have proposed a rule back in May which would basically ban political predictions on Polymarket. As a presumably decentralized protocol, Polymarket would be unable to comply, putting it off-limits to US users, though it technically is already, which is even more odd. In any case, it seems that US politicians are pushing for the CFTC to approve this rule as soon as possible, while the crypto industry is pushing the regulator to scrap it entirely. This is probably because if the CFTC passes this rule, then it would be harder for Polymarket to eventually gain regulatory approval in the US. On the flip side, though, one could argue that the real reason why the crypto industry is pushing the CFTC to scrap its proposed rule around prediction markets is because it would make it possible for big players within the crypto industry to warp the public perception of election outcomes via polymarket bets. If this is the case, though, then one could also argue that this is exactly what the mainstream media has been doing in recent years, and that its own biased political polls should also be banned. Of course, that would never happen, because then more people would be able to vote without feeling invisible social pressure. Regardless, the comment period for the CFTC's proposed rule ended on the 8th of August, meaning that a decision about the rule could be imminent. It's honestly hard to say whether it would be good news or bad news if it gets approved. Feel free to let us know your thoughts in the comments. It's a complicated problem. Speaking of which, another complicated problem has been the yen carry trade, which many have heard about but not all understand. Well, it's pretty straightforward. Japan has low interest rates, so investors borrowed trillions of dollars of yen to buy other assets. When the Bank of Japan raised interest rates, however, those yen loans became more expensive, and that forced those investors to sell the assets they had bought to repay their loans. The catch is that this meant they had to buy back yen, which made the yen stronger, making loans more expensive, and so on. The result was what amounts to a short squeeze on a global scale, where essentially every other major asset was being sold to buy back yen. This caused almost everything to go down and the yen to go up, and it's possible this would have continued if the BOJ hadn't backed down on its rate hikes last week. This has led to speculation of just how much yen was borrowed to buy other assets, and how much of those yen debts are still outstanding. Surprisingly, estimates for the number of yen borrowed to buy other assets range from 500 billion to the tens of trillions. Whatever the case, it's a lot of money. This is why JP Morgan's declaration that 75% of the yen carry trade has been unwound is so significant. In plain English, it means that 75% of the sell pressure related to yen loans is over. However, some are questioning the megabank's analysis, probably because it said the selling was half over shortly before. Fortunately, the fact that the BOJ backtracked last week means that the risk of any additional yen-related market crash is minimal. Unfortunately, the fact that the BOJ backtracked means that investors could be tempted to take on more risk. Some entities are reportedly already buying BTC with borrowed yen. What this means is that the yen carry trade could spook the markets again the next time the BOJ raises interest rates, and it's possible this could even happen if the Fed cuts rates in September. That's because Fed cuts would make the USD weaker and the JPY stronger, potentially pressuring yen carry traders. Then again, the fact that the JPY rally was so aggressive means that it's likely to weaken substantially between now and mid-September. Wouldn't you know, the yen already seems to be weakening. This should introduce enough wiggle room for the Fed to cut without strengthening the yen too much. As a fun fact, it's believed that the BOJ purposely forced the unwind of the carry trade to strengthen the yen, which has lost 50% of its value in the last few years. Although this may not have been the intention, the outcome speaks for itself. The yen is back within a somewhat normal range against the dollar. Now, the key takeaway here is that the bulk of the yen-related volatility seems to be over. This means we won't have to worry about another BTC flash crash below 50k for the foreseeable future. It also highlights the possibility that last week's flash crash below 50k was the local low before the final blow-off top phase of the bull market. And with all that said, it's about time we looked at last week's top-performing cryptos. So, last week's top-performing cryptos were SUI, Zcash, Helium, BitSor, and Akash Network. So, starting with SUI, it appears to have pumped on the news that Grayscale had launched a SUI trust. For context, Grayscale trusts are analogous to ETFs, and its Bitcoin and Ethereum trusts have since been converted into actual ETFs. Naturally, Investors are assuming SUI will follow a similar path. Now, SUI is currently struggling to get above a key resistance level of around 90 cents, but the fact that it's looking bullish across almost every time frame suggests it could keep going higher. In that case, the next stop could be around $1.10. Conversely, a rejection could take SUI down to around 80 cents. Next up, we have Zcash, whose ZEC coin appears to have pumped on the news that Zcash founder Zuko Wilcox would be returning to the project to develop a hybrid proof-of-work, proof-of-stake consensus mechanism. For reference, Zuko stepped away from Zcash in late 2023. Time flies. As you can see, ZEC has effectively been chopping sideways over the last year. The most recent rally seems to have completed a bull flag pattern from the recent lows. ZEC could continue chopping around $40 until the rest of the crypto market starts rallying, or some other big Zcash headline comes out. As for Helium, HNT appears to have pumped on the news that 2 other mobile carriers are testing out Helium Mobile's peer-to-peer 5G network. For those unfamiliar, Helium Mobile already works with T-Mobile. You can watch our recent video about the top Solana projects for more info there. Similarly to SUI, HNT seems to have hit a key resistance level around $6. If it breaks through, it could rally as high as $8 in the next few weeks. If it gets rejected, though, it could fall back to around $4. When it comes to BitAnswer, its Tau coin appears to have pumped for the same reason as SUI. Grayscale introduced a BitAnswer trust alongside the SUI trust. This suggests that institutions are interested in AI cryptos. This is to be expected given that AI cryptos are practically more volatile AI-related tech stocks. True to form, Tau appears to have been rejected at a key resistance level around $300, but also appears to be painting a double bottom pattern. If it plays out, then Tau could rally as high as $480. If it doesn't play out, though, Tau could continue correcting and fall as low as $250. And finally, we have Akash Network, whose AKT coin appears to have pumped on the news that the project will be the lead sponsor of this week's Cosmos conference in Buenos Aires, Argentina. Akash Network also showcased how its open-source AI-powered chatbot is capable of running locally. Nice. Like Tau, AKT appears to have been rejected at a key resistance level around $3. The difference is that it doesn't seem to be painting a double bottom pattern. This means that it could keep falling, potentially retesting its recent lows of around $2. Conversely, it could rally as high as $4. And if you want to know which cryptos are rallying the most and where you can trade them, then be sure to check out the Coin Bureau Insider Telegram channel using the link in the description. And that's all for today's Coin Bureau Weekly Crypto Review, so if you enjoyed it, you know what to do. Hit that like button, subscribe button, and bell icon too. Don't forget to check out our deals page where we have massive trading fee discounts of up to 70% and sign-up bonuses of up to $100,000 on some of the best exchanges, only for the viewers of this channel. Also, if you want to pick up some snazzy crypto merch, then the Coin Bureau merch store has you covered. You can find the link to those resources and many others in the description below. Thank you so much for watching, and we'll see you all in next week's episode.